All right, everyone. Thank you so much for joining us to the first ever Liberty Mastermind webinar. My name is Robert Ian, and I would like to welcome all of you to our first webinar that we're doing tonight. We've got just a great lineup here tonight. We're going to have myself, Robert Ian, along with Carrie Lutz and Gregory Mannarino. Some of you may have heard me on goldseek.com radio, and we're going to be talking about that a little bit tonight. Carrie, could you talk a little bit about what you're doing?
Oh, sure thing, Robert, and thanks for handling all the technical aspects here, because couldn't have done it without you. And probably a lot of you know my site, my show, the Financial Survival Network. I can't believe I've been doing it for more than 3 years now, and it's all about getting you information so you can figure out what to do next. I think in a large way, all of the people that I have on my show and the three of us here, it's all about giving you information so you can figure out what to do, because what's going on now in the world, the financial system, and the challenges that you and we face, it's all depends upon our individual situations, and getting as much information as you can and making informed decisions rather than emotional decisions is really going to help get you through this. And I don't think that any of us really know exactly the way this is going to come down, but we do have our own viewpoint, our own decision, and I think you get as many different viewpoints as you can, and then you're in a better position to set your own course on what is a very stormy sea, and hopefully your ship and your family and your friends, your community are going to get through it as unscathed as possible. So thank you all so much for coming, and we've really been looking forward to this for a while now, and hopefully it's going to be a great experience. And thanks so much to Greg for being here as well.
Glad to be here. Well, thank you both for having me here. I'm thrilled. I love doing the live one. Over here in Vegas recently. And this is going to be a lot of fun, I think, too. I'm glad it looks like we got a good turnout here. I just think it's just so important to share ideas, and especially among people that get it, because unfortunately there are just so many people that they're zombified. They're zombies. It's very sad, but you know how I feel about this, Robert. I think we're witnessing a natural selection in many, many ways here. There are those that are going to get this, and there are those that are just not going to, no matter what you do. And unfortunately, I think that's the state of affairs that have been shoved down the throats of the masses with purpose. Because you've got to be deaf, dumb, and blind not to see what's going on around you right now. And people say, hey, where's the collapse? Where's it happening? You know what? It's happening right now. And whatever nonsense the world governments are force-feeding us down our throats, it's garbage. There's a European recovery, really? Well, what happened today with Mario Draghi coming out stating he's going to stimulate more? He's going to, they're going to be doing full-on quantitative easing. The Federal Reserve tapering? They're not tapering anything. And I can prove this to anyone who wants to listen. So the state of affairs is this. We are deteriorating. There is no economic recovery. And despite what's happening recently to the price of gold and silver, it doesn't mean a thing. None of this is real. The paper derivatives market, and I'm sure this is going to come up here, it's fake. There is no price discovery whatsoever when it comes to paper derivatives, and this is being done on purpose. And what I do, and what I want everyone else to do, is embrace this, because we're never going to witness anything like this ever in the history of the world. So again, for us all coming together here, and everyone involved, bravo, because I think personally this is the place to be where we can share ideas, and it makes sense of what's going on, pretty much.
Exactly. And, we've got a lot of ground to cover tonight. We're going to take our time. We're going to answer all of your questions out there tonight. Just a real quick overview of how it's going to work tonight. On our desktop here, you can probably see in the background there's a disclaimer. Kerry, with his background as a lawyer, has asked me to urge everyone to read that, of course. So everybody read that, get familiar with it. But tonight, if any of you haven't ever participated in a webinar before, you've got the control panel there. You can actually type in some questions if you want. Kerry and I are going to take just a couple of minutes up front and just talk to you about the Liberty Mastermind symposiums, plural, 2 that we've put on so far. We're going to do some of these webinars as a prelude now in advance of the third one that we're planning for early next year. We thought it'd be a really good idea to get some of our speakers that we've had on each month as kind of an interactive format like this to really get the conversation stimulated and moving forward, just to keep the conversation moving so it doesn't drag in between, because there's so much that we've got to stay focused on. And so you can type in your questions, you can keep things going. We're going to talk a little bit about that. We're going to spend a lot of time with Greg tonight because he was a dynamic speaker. I've lived in Las Vegas now about 4 years. Was really surprised and pleased when I found out that Greg actually lived here. So we've gotten to know each other pretty well here, and it's really, really interesting to have someone of great like mind so close that you can actually have lunch with every once in a while. So it's great. So Kerry, maybe you can kind of start the ball rolling, kind of talk about how you had the idea for this Liberty Mastermind and how it all kind of came about.
Yeah, well, I just kind of felt that all of us alternative finance people, internet, radio people, people who put videos up like Greg, YouTube's, we all kind of live in isolation. We're lone wolves out here, kind of barking or howling in the wilderness. And, there are the big organizations, the Agoras, the Stansberries, the Caseys, and, they're kind of institutionalized. They've been around for a long time. But then there's all of these individuals like us three and so many others who just put out our work product, our audios, our videos daily, and we're just doing it really not in any hope of recompense, just because we want to get the message out and because we love doing it. Myself, I just looked through my archives the other day. I had 2,200 interviews out there. I couldn't even believe it. I don't even remember doing that many. But the point is, it's a lonely kind of thing. We know that you're out there listening, and hopefully you're getting something out of it. Obviously you are, because you keep coming back. I see thousands of people every day, tens of thousands, listening to what we put out. And, Greg, 10, 20,000 people will view one of his YouTubes, but yet, we seldom ever get to interact with people. We get emails, we get comments on the site, but it's still a lonely undertaking. And I was talking to Robert, and I said, we really ought to do an event just so we can get to see the people who are really out there listening to what we do and who are having some kind of effect upon. And Robert said, yeah, this is really a great idea. I don't know if you know it, but I've been a professional speaker my whole life. This is what I've been doing. And, the idea was hatched, and we came up with Dallas for the first one. And, I think we had 12 speakers or 15 speakers there, including us. And it was just a wild success. I mean, it was magical, where we had a room full of people and everybody was on the edge of their seat the entire time, and it just really was incredible. And in a way, it's kind of validation for what we do every day, every week. And then I said, hey, let's do a webinar. Let's see, let's get people out there and really get them involved, so they don't have to hop on a plane, stay in a hotel, spend $1,000 or $2,000 for a weekend, and let's really connect in a way that we don't usually get to do in our everyday existence. And thus, here we are. And, really I owe Robert a debt of gratitude. He was doing the commentaries, the weekly commentaries on Chris Walczek's Gold Seek show. And, I was listening to it for a couple of years before I said, I think I could do this. And, I started with a microphone that I bought at Radio Shack and a really low-end kind of setup, and I started doing it, and I said, yeah, I really can do it. And Robert really inspired me, so we kind of are inspiring each other now to keep taking this whole thing to another level. And here we are now. We've got more people keep checking in. Robert is a stickler for starting things on time, and I think it's really, really important that we do that, because if it were left up to me, we'd probably just be getting started right now. But there's many of you out there now who are participating, and like I say, I'm here in Florida. I've got my producer in the office with me, and I talk to a lot of people every day. But like I say, we all are isolated, and you who listen, many of you are isolated too. I can't tell you how many people are elderly who are shut-ins in their houses, who don't get around a lot, who don't have jobs, who are looking for ways to get through this, because like Greg said, there's the zombified people out there, and then there's you who understand what's going on and are looking for ways to deal with it. And it's just gratifying, the whole thing, that we can get together and do this. And it's we really can't do it without people who want to connect and really want to become part of this thing, because we haven't seen anything yet. And Greg will talk more about this later. We're going to turn it over to him and listen to watch some of his videos from the last Liberty Mastermind. But really, this is a major effort. I want to say group effort, but it's more than a group. And we're in this together. We really are in this together. And there's a lot of things that we need to be thinking of and doing, and we need to get our creative juices flowing. We can't, to some extent, we need to focus on the problem to define the problem, but I think we've done that. We need solutions now. We need plans, and plans is not like going to sleep with thousands of rounds of ammunition in your closet and your emergency preparedness food and waiting for Armageddon. That's not what this thing is about. Plans means what comes next. What are you going to do? How good those plans are going to work in the future, it doesn't matter. It matters that you have the plan, because that you're focused on the solution, not on woe is me, because this stuff can get really depressing and really upsetting if you allow it. And you can't allow the elites to take control of your mind. That's what they've been doing here for hundreds of years. We've allowed them to do it. You need to take back control of your mind, the power of your mind, and carry on. As my former law partner used to say, carry on, control, keep the mission going. Charlie, Mike, carry on mission. That's really it, and that's why we're here.
Exactly. So, yeah, we really want to dive in here quickly, because it's we've got a lot to cover, and that Kerry really summed it up well there. But it's really about a format. You can go to a lot of these symposiums, these gold conferences and things, and you can be in a room of 1,000 people and feel all alone. You can go to the Liberty Mastermind. You can walk away and know Greg Mannarino, know David Morgan, know all the people that were there, and you can actually go home with relationships with these people and really know the people that are on the cutting cutting edge, and that's really what we want to bring to you here. We made videos of the last one. We didn't do it of the first one here, so one of our registrants that's on the webinar tonight will be giving away a set of the videos that we've got here as well for everybody. So that'll be kind of exciting. We'll do that at the end. We'll send them instant access here tonight when we're finished to everything. But Greg, if you could, I mean, your website's amazing. Your YouTube videos are dynamic. I mean, everything you do seems to be extemporaneous. I mean, when you presented at the Liberty Mastermind, you really blew me away. I mean, you didn't use a PowerPoint. Your presentation was authentic. It was dynamic. You worked the room. Everything came from the heart. You basically walked the talk in terms of everything that you said, that you believe. It came with a passion and an energy that I've seldom seen in this space, basically. And one of the points that you made was that we all talk about, or many people talk about, the debt bomb, the debt bubble, what's going to happen with that. You make and have made a very powerful point about something that goes hand in hand with the debt bubble. You call it the human bubble. Could you speak and talk to that? Because I think it's just a really important point, and I think it sets the stage for so many of the things that you talk about, almost as a foundational message, because it's what grabbed me initially. Could you speak to that?
Sure. It's the most profound thing if you really sit back and ponder this. It's frightening at the same time, but I really believe people need, beyond any shadow of a doubt, to gain a perspective on this. So let's just say this. I mean, everyone out there, even the zombified individuals, they understand it. They've been hearing this even from mainstream. The debt is insurmountable. It can never be paid back. It's a huge problem. It's not just a problem on a financial level. And this is how I would have to say 99.999% of people believe. They think this is a financial problem, although it is in some respect a financial issue. What we've created here, and I want people to think about this, what I'm about to say, because it's very profound. By us all being allowed through this debt-based economic model that we have now, we do not have a wealth-based economic model like the gold standard. We have a debt-based. What does that mean right off the bat? It means simply this. In order for the system to function, it needs to borrow cash into existence in perpetuity. It cannot stop. Once we admit we have a debt problem, or we try to say we can't do this anymore, we have a debt crisis, like the European debt crisis, and we'll have to try to fix it. We're adding more debt. It will never work. So what people need to understand is what we've allowed to fester and grow, along with the debt, is a human bubble. The human bubble came directly out of being allowed to access resources from the future to live a better now. Basically, we've, all this debt that we keep borrowing and pulling out of the future to have resources that we would not have access to had we had, let's say, a wealth-based economic model. This is allowed, and you can see it's insane. I wish I had a chart to show you, but if you were to look at the global debt and how it's gone up like this, like a hockey stick, we've watched the population parallel that. In other words, they've gone up in tandem. That's very frightening. Again, why has this been allowed to happen? Because we've been borrowing resources from the future to live that better now. So we've seen a global population boom. Okay, so what people need to understand at its most basic level, and this is where this gets a little bit scary, is this. Look back on history. I always urge everyone to do their own homework on everything that I do. Every single bubble that we've had, whether it's financial, whether it's economic, whether it's whatever it is, they have to burst because they rise above a level that can be sustained by any means. Now, the reason why I'm saying by any means is because you have to understand what the world central banks are doing here. They understand. Believe me, they're not that stupid. They realize where this is going. We've realized that we've hit a critical mass at this point. So what are they doing? They're fueling a debt problem, adding more and more debt, making this bigger and bigger so we can have access to those resources. At one point, when that bubble bursts, it will correct along with the human bubble. So we will see, and this is a mathematical certainty, it will happen. We're going to see a loss of life on a global scale that is going to be biblical. Like, I'm not a religious guy, but I'd like to refer to it that way. Because again, it's not just a financial issue, it's a resource issue. And that's where what we're starting to see right now. I mean, you have to put this into another perspective. All the unrest that we're seeing around the globe right now, everything, it's all about resources. So we're seeing this unfold right now. And these wars, and this is all part of it as well. It's a very twisted mechanism that they've allowed to happen here. And again, it all goes back to this system needing to borrow cash into existence to function. That's why we can't balance a budget. You ever wonder why we don't have a balanced budget, or why they can't, get their books balanced, the country? Because they understand this problem, but they won't talk about it. And this, as you know, this is the greatest threat to humankind, the debt bubble. Because again, when it bursts, correction in global population, it's going to be worse than a nuclear exchange with regard to the loss of human life. And there's no way out of it. None. Profound, isn't it? I mean, it's shocking. But you have to really think of it in those terms here. This is not just a financial problem. And the issue with it all comes down to this. Even the most well-prepared people are not going to get through this. You have to understand how this is going to unfold. All those zombified people out there, what we're witnessing here, in my opinion, I've taken a lot of heat for saying this, and I'm just going to keep on saying it because I believe it's the truth. I believe we're witnessing a natural selection here, and how Kerry was talking about the being isolated. That's because in many, many ways you've been given the know-how to appreciate the gravity of this situation. By and large, most people have no clue as to how this works, how money works at all, and how the system has been allowed to develop into the greatest threat to humankind, period. That's what this is. And the issue is, and we can see this right here in the United States now, we are one nation under surveillance, cameras everywhere, while the police in every state in the union have been militarized. Believe me, and I know you guys are aware, but those listening have to understand that those that are in power clearly understand where this is going. So they need to keep ready. They need to keep us under surveillance. They need to have the militarized police. Because when this hits home here, your neighbors out there that you're friends with now, chances are they have no clue what's going on. When they do not have access to those resources, for example, food at one point, because once this thing happens, once this debt bubble bursts, and I think it's cracking already, the stores will be cleaned out, they will not be able to be restocked. This is in a worst case scenario. You always have to think of things in a worst case scenario. That's how I always think about it. Sun Tzu, The Art of War. If you're not prepared for a situation, you will not survive it. Period. And so basically it's this. Your neighbors out there are going to turn into whatever they need to turn into in order to survive. And I honestly don't think there's a way out of this. And if any of you out there can think of a way out, I would gladly love to hear it. But they understand this. Policymakers who are colluding with the world central banks, the Wall Street banks who run the world. We've talked about that. I think you even have a video about it that I spoke about. But that's the way I see this folding. We have a debt bubble which is directly connected to the human bubble and has allowed the human bubble to fester and grow into what it is now.
I just want to play a quick video here from...
This is not a financial problem. And a lot of people, I'm a finance guy. Everybody knows that. But this is a problem about a correction in the population of the globe. It's about resources. Again, why is that? We've borrowed from the future to live a better now. Allowed ourselves to get resources that would not have been available.
At the same time.
So when the debt bubble bursts, the availability of these resources will disappear. All the social unrest you're seeing around the world right now is going to be coming right to your front door. I don't care where you live. Gated communities, wherever it might be. Because your neighbors are not on the survival list or the list of the chosen ones, whatever. You are. Period.
You said the social unrest is going to come right to each person's front door, no matter where they are, where they live, gated communities, wherever. And I mean, when this explodes, I mean, you really see that. It doesn't matter how well off the city is. I mean, what kind of preparation do you see a person needing to do?
Well, like I said earlier, I think even the most well-prepared people, there's going to be nowhere that's going to be safe here. And that's the truth. I don't care where you are in the world. Maybe if you isolate yourself from people, maybe that would be it. But when people get into that survival mode, they will do whatever they need to do to feed themselves and their family, which means raping, pillaging, killing, whatever it might be. So, I mean, what do you need to do here? And I talk about these things more from a financial aspect, and that means getting away from paper, period. And again, embrace what's going on here, people, with the prices of gold and silver. And I want to talk about that just a little bit further here, because something very interesting is taking place. But, I mean, I'm a strong proponent of the Second Amendment here. You need a way to protect yourself. You need a gun, period. You need food, you need shelter, you need a bug-out plan. And even with all this, you're in a lot of trouble. There's no doubt about it. Because I have no doubt that in a worst-case scenario, again, and you have to put this in that perspective, we will have martial law. We will have confetti as a currency. It won't be worth anything. People will not have access to any of their funds that they believe that is in the bank. And if any of you out there understand a fractional reserve system, you know your money isn't even in the bank. Whatever you think you have. It's all an illusion. It really is an illusion. And those out there with the power to manipulate everything are going to do that. We are clearly marching back in time to a two-tier society. The middle class is being decimated. And anyone who can't see this has got to be absolutely blind here. So, again, their grand scheme here is simply to create a society of the haves and the have-nots. And a great many people are not going to survive. And they are counting on this. They absolutely realize where this is going. Because honestly, this seems to be happening by design. There's no other way to explain this. If anyone out there can explain to me why the police are militarized, why we are one nation under surveillance, right there alone, what's the matter? The old beat cops, they're no good anymore. They used to carry their revolvers. Now they have to have semi-automatics, fully automatic weapons. They need tanks now instead of police cars. They need Apache helicopters instead of whatever else. I mean, this is insane. They're being armed just like military tactics, military training, military weapons. I mean, it's out of control. But and that's another thing. I believe we are witnessing events unfold that led me believe that we have to be very close to this entire thing coming down. Again, look at what happened just today with the European Central Bank. This market topped out recently. I called that with pinpoint accuracy. I told everyone what was going to happen. Last Friday, I did a video on my YouTube channel and said, caution ahead. I did a whole bunch of articles on my Seeking Alpha Insta blog. So, anyone with the eyes here that's in the financial business can see this coming. So the market pulled back, and they weren't going to allow that to happen. Today, the European Central Bank, after finding out that the business sentiment in Germany has been in a 5-month free fall, they're hinting towards the market now about a full-on quantitative easing program. That's what they're doing. They're already halfway there. So they're buying assets from the bank. They're doing negative interest rate policy just like the Federal Reserve. So you have to understand how desperate the world's central banks are. And here in the United States, what is the Federal Reserve doing now? The Federal Reserve is requiring, this is a requirement, requiring the banks to hold assets. There's a lot of speculation as to what these assets might be. Personally, I think it's gold. Gold, silver, precious metals that they've suppressed on purpose through the mechanism of the paper derivatives market, which is fake. Okay, but this is reflected in the spot price of the actual metal, so take advantage of it. But this just shows us all how desperate they are, and how close we must be to this. All they're doing is fostering a wealth transfer. It's that simple. Anyone in the United States right now who has an interest-earning account is being robbed in the literal sense through this mechanism of the Federal Reserve suppressing interest rates. They're being paid interest less than the actual rate of inflation. What is this doing? This has allowed speculation in the U.S. equity markets that we've seen all-time high after all-time high. Something else I said would happen. I said this would happen. For those of you that don't believe that, check Greg Hunter's channel. I said about a month and a half, 2 months ago, I went over exactly how this would play out, and it played out exactly like I said it would. Anyway, this whole thing is a twisted mechanism to, again, destroy the middle class, steal their wealth, redistribute that wealth to the upper echelon of society. And it's going to get much, much worse, I think, before it gets better. But I think we're very close. I really do.
We've got a lot of questions rolling in for both Carrie and for you, Greg. I just want to ask, one of them, when the dollar goes to pot, will our trading accounts not also follow suit?
Well, you mean the money that you have in your brokerage?
Mm-hmm.
That works. That definitely does worry me as well, because of course at that particular point you should have been converting this cash out. This is how I play this game, and I've been very candid about this to everyone. I play these markets. Everybody knows that. My profits go into precious metals. That's where they go. I sweep my accounts. I keep a certain amount of cash in my trading account. Profits over and above my trading cash gets pulled out, and I buy precious metals with it. I've been doing this for a long time. This is what I will continue to do, to bet against the debt, because that's what we're doing here. I look at everything as a trade. I even think I spoke about that at the last symposium. And what you're doing here by holding metals, which is real wealth, is real money, is betting against the debt bubble. And it's a very simple scenario to understand how this is going to play out. And I'll just cover that just real quick before we move to the questions, I would suppose here. But I want people to think about this. And I talk about a theory called the fluidity of money in a brief that I just published. It's called Money Matters. It's available on lulu.com. It's $3. It's $2.99. Anyway, it's very simple. So we understand the suppression of interest rates has allowed speculation in the market. So at one particular point, when the debt bubble bursts, the markets will be allowed to do their sole job. Understand, for those of you that don't understand the markets at all, if you want to take one thing away from what I'm about to tell you, this is it. The sole job of the equity markets, the debt markets, every market period is one thing. It's to determine fair market value. That's it. They have no other job. So we have a Federal Reserve that is distorting the entire mechanism by playing with the bond market, the debt market. And the debt market prices everything, for those of you that don't understand that as well. So what they've allowed to happen here is, again, suppress interest rates, robbing savers, a lot of speculation in the market. When the debt bubble bursts, this is a concept I want people to think about as well. As the debt money is leaving the debt market, cash is leaving the debt market, it's going to put pressure on equities. Equities will sell off. So where's all this cash going to go? The cash that's leaving the debt market, the cash that's leaving the equity market. It does not go to money heaven, people. It's going to simply go into other assets. Can any of you imagine where they're going to go? Into suppressed assets. And we've not seen anything like this in the history of the world. Silver right now is below production cost. So, I mean, this should show you where the opportunities are. So you have all this cash is simply going to look for somewhere else to go. And it's going to go into commodities. And that's why, again, as the dollar, the debt, becomes worthless, and commodities rise, this is how these resources will not be available. Because they're real things. Eat things like corn and beef, and people can see what's happening to beef right now. But this is the mechanism, and this is how it's going to play out. And we've seen this before, and that just makes it even more in our faces. Whenever we've had a bull market in equities, and when everyone of you out there to do your own research and look at bull markets that we've had in equities, in the stock market, you simply get a movement of cash out of certain aspects of the market and into others. But we've never seen it like this before, because we have the Federal Reserve that's fostering this. So we're just going to see this in a more dramatic scale. Cash will leave. This bull market will not last forever. No bull market in history has ever lasted forever. So we'll see a rotation of cash out of the debt, out of equities, into commodities. It's a very simple equation. We've seen it before, but it'll be much more dramatic this time.
Yeah, I agree. I mean, and we've seen this cash go into trophy real estate in New York, in LA, in Miami, and you've seen it. You've seen foreigners effectively dump their U.S. dollar holdings because there is no place else for them to put it. But they're also buying up metals as we speak, and recently saw a statistic: 400-ounce gold bars. The demand is up 243% from last year. Obviously, wealthy individuals buying them. We're talking individual demand, not talking 1-ounce Krugerrands or Gold Eagles. We're talking 400-ounce, basic, good for delivery bars by individuals, up 243% this year already. So we ain't seen nothing yet.
No, I agree with you 100%. And we're going to see this get much, much worse here. And what are they going to do? Let me just talk about something real quick. A very astute gentleman brought this to my attention, believe it or not. On my Seeking Alpha Insta blog, you can actually see this. What we're witnessing right now with regard to the price action of silver is exactly what we saw just prior to the crash of 2008. As a matter of fact, just 1 month prior to the collapse of Lehman Brothers, we saw this exact scenario take place. That might say something. That might actually, silver might be telling us something here. We need to keep our eye on that. Again, it's just a simple movement of cash, and we just see this all the time, but never to this degree. And that's why people who know realize that these prices here, which are fake and suppressed, they should be laughing themselves and to death and buying more and grabbing as much as they possibly can. Because at one point there's going to be a frenzy of people trying to get away from the U.S. dollar. Look what they're doing here. Let's just talk about this real quick. We understand, and this is common knowledge, countries around the world, many of them already have omitted the dollar in their trade. We have here in the United States, we're supposed to have a recovery here. I can prove to you in 1 second how we're not having any type of recovery. In order to have an economic recovery, you have to have one thing. And that one thing is this: money velocity. That is, the rate at which cash is moving through an economy should be going up. We're at historic lows. So this whole thing about there being an economic recovery, it's a joke. So we have a Federal Reserve who continues to print cash into thin air in epic amounts or adding it to a digital screen in an environment where these dollars are not needed. In other words, you have countries omitting it, dollar from their trade, or money velocity that is historic lows, and they keep on printing. So you can see where this is going to go at one particular point. What people don't realize as well is most U.S. dollars exist outside of our country. So what does this mean in the grand scheme of things? As the dollar continues to lose its reserve status, as people see the value of it disappearing, despite what's going on recently, because the euro is getting destroyed. Other currencies are falling, so the dollar is looking pretty good, but that's going to change. That's another sign to me that we must be close to something. But as these dollars are dumped, where are they going to go? They're going to come right back here to the United States and create massive inflation. Again, debt, the debt bubble burst. The dollars are units of debt. They're not units of wealth.
You say to all the deflationists, though, who say that the destruction of debt, and they never really talk about dollars coming back home.
Robert, but they are. I couldn't hear you.
You're breaking up a little, Robert.
Yep. Go ahead.
Yeah. So also, I know somebody else who picked up that pattern as well, Greg, and that same person called the peak of silver at around $49. 3.5 years ago. So super bullish formation for silver, and it could mean that it breaks $17 on the way, but that means that silver will hit its bottom, and then you know where it's going from there.
Absolutely, there's no doubt about it. We're going to witness just the movement of cash from certain assets into other assets. And again, just embrace this. This is all I'm doing. And you see, the other issue with people when it comes to silver or gold, this is not a short-term investment. Whether this is 6 months, a year, 5 years, or 10, whatever. I don't think it's going to be that long, quite obviously. But you need to hold on. Think about this. It's not an overnight trade. You want to trade overnight? Trade the derivative. Open up an options account. But other than that, you're not going to get an instant fix here. So just be happy about it. Embrace these prices, and realize what you're doing. That you're just betting against the debt bubble. You're taking the short end of that trade. That's all it is. It's that simple.
What do you see happening as some of these physical gold exchanges come on tap and the price discovery mechanism moves from paper to physical? What do you see happening over the next 6, 12, 18 months as more of this happens? What do you see to the actual price of gold as that discovery mechanism changes?
Well, let's say this. I believe at this point I think they're going to do whatever they need to do. And again, they're going to pull things out of a hat that we haven't even thought of yet to keep this propped up. And until they run out of ideas or whatever happens here, until maybe the free market does its sole job, when people or countries realize that by holding a U.S. bond, they're actually losing money because they're not even paying the actual rate of inflation. You're going to be insane to hold a bond right now. Why anyone on this earth would want to hold a bond right now, from a financial perspective or profit potential, I don't understand what they're thinking. So at one particular point, people are going to say, hey, I'm sick of holding this debt. They're going to dump it, and that's where we're going to see this correct. But until that point, they're going to buy it all up. Despite what we're hearing about a taper, there is no taper. How do we know there is no taper? Let's just outline that really, really quick. For those of you out there that maybe are not aware of this, and I make a joke about this quite frequently, the Federal Reserve and Janet Yellen, these people have no magical powers. They possess no supernatural anything. So when they say, and they tell us all that they're going to keep interest rates low, how do they do that? Anybody care to speculate? Oh, I'm going to tell you how they do that. They have to get into the bond market and make it happen by buying bonds. That's how they suppress these interest rates. So when you hear about a taper, you know that it's nonsense because we would see this reflected in the bond yields. So again, I have challenged, you can imagine, I probably get, I don't know, hundreds of thousands of views over the course of a month. No one as of yet has been able to prove to me that we have a taper, other than Steve Leisman on CNBC, who fully believes that there's a taper going on here. I would love to talk to that man in person. I really would. It's kind of bizarre, but that's the truth here. So again, until they stop, this is nothing but opportunity for us, upside down, backwards, and sideways. And I can promise you all, that's what I'm going to be doing. All of my friends are doing the same thing that are betting against this debt. And they're doing that by holding hard assets. My favorite asset, and I think everyone knows, is silver. I think it's the most undervalued asset in the history of the world. So I do hold all of the metals, full disclosure, but I hold more of that than anything else.
Let me jump into a couple of these questions here because they have been kind of flowing in. How will the Syrian invasion by the West affect the price of gold and silver, if any effect at all?
What I think is going on here is very simple. It's a dollar propping up mechanism here. They've allowed this to fester to this level. This is why we have not gotten involved until now. Let me go over a couple of other dollar propping up mechanisms for those of us that don't know. This whole border issue right here in our country, why did they leave the border open? Because they needed an excuse to borrow cash into existence and disperse it to the South American nations. Joe Biden promised this country this amount of billions and this amount of billions to another one. And that he's asking for more billions to support these, these refugees or whatever they are now, or they're considering them. Again, it's just a mechanism to keep the system floating, to keep it, going, to borrow this cash into existence. That's what this is here with this whole Syrian issue and ISIS. They, believe me, a lot. I beat up President Obama quite frequently on my blog, but the man is not stupid. And he's not pulling the strings. This world is run by the J.P. Morgans and the Goldman Sachs and the Morgan Stanleys. They run the world. Obama is their spokesperson in many, many ways, and they've allowed this to fester to this degree so the General Dynamics and the Lockheed Martins and all this other stuff can reap the rewards as we can pour billions of dollars, tens of billions, maybe more than that, $1 trillion probably, into this new effort that's going to go on for years. So there's a dollar propping up mechanism. Again, they're going to do things that we can't even think of yet. And this is one of them. And this is going to get much, much worse, in my opinion.
Yeah, and look, the proof that he's not running it, no boots on the ground. Obama saying no boots on the ground. And then his generals and his Secretary of Defense, oh yeah, we need boots on the ground. And who's going to, in the end of the day, whose opinion is going to carry the day?
Yeah, it's just a dollar propping up mechanism. That's all this is. Mm-hmm. And it's a dollar, diluting mechanism here. Just the Federal Reserve here has gone mad. They're also part and parcel to this entire thing, and they're dictating a lot of the rules as well. Because why? They're run by the Wall Street banks. This is no secret. This is not a government entity. And whose side do all of you think they're on? They're not on our side. There are some people out here that do believe that's the case. I mean, they love the Federal Reserve. I mean, there are people out there that do videos about me talking about Greg's a Federal Reserve hater. You know what? I don't like the Federal Reserve. They've destroyed the value of the U.S. dollar by 98%. They want that last too, and they're going to get it.
Mm-hmm. A guy named Richard has written in. He says, what happens to my current outstanding mortgage debt when the reset happens?
You're going to still owe it. You see, here's the issue with all
That's
that.
right.
These banks are not going to lose. They will get whatever is coming to them in any way that they can. So I know there's a lot of people out there hoping that it's going to disappear. No way. You may be imprisoned for this. They're bringing back debtors' prisons here in the United States. Does anyone even realize that? Debtors' prisons are coming back. Do a little research about this, people, so you should be very afraid. You should settle your debt, too. I tell you how to do that in my book, The Politics of Money, which is now available as an ebook. I tell you exactly how to do this. Pennies on the dollar. Take advantage of it.
Yeah, you got to get out of debt because Adrian Douglas, who passed away a couple of years ago, used to be on the GATA board. He and I had long discussions about this. We talked about what the reset would look like and the introduction potentially of a new currency and if it would be gold-backed or not and what would happen to your outstanding debts or mortgages. And, the end result was your debts will be revalued in whatever the new currency is, and they will stay with you. You're not going to escape them. So you better get rid of them however you need to. Pay them off, whatever you need to do, because they're going to follow you.
Robert, let me just say this real. I'm sorry. You want to go first, Kerry?
No, go ahead.
What I want people to understand is this: why do they think there are so many individuals in this country? Well, let's start at the macro scale. We have a country now that's nearing $18 trillion in debt. 18 trillion. We have a country where most people are indebted. Why is that? It's because we have a debt-based economic model. It demands this. If we had a wealth-based economic model, we wouldn't have this issue here. And their job is to keep you slaves to that debt. You got to get yourself out of this. You got to find a way to get yourself out of debt. Most people, and this is very, very sad, they rent, lease, and borrow their way through life. This is a surefire way, number one, period, the end, to stay broke. You got to get out of that paradigm. You got to, today, if you take nothing else, I guess, away from this, that's that important. Stop living in the world that they've laid out for you. Create your own path and start thinking outside the box. I mean, that's what this is all about. Why these symposiums are so important, getting like-minded people together that get it. And no matter what we do, we're not going to be able to help everyone. That's a fact. And we have to accept that. And some people are going to ignore it because they can't get their head around it. When a problem is so epic and so monumental, people tend to shy away from it. They don't attack it head on like we do, and the people that are listening, I would imagine they're doing that too because they've been smart enough to want to participate in something like this. It's just so important.
Okay. And just a note on that, I was in the debt business for many years, and you can always, if you have a good enough story, you can always basically buy your debt down for for less than you owe, and basically the only time you want to go into debt is when you're going to have cash flow as a result of that debt that's going to liquidate the debt and give you a return greater, okay? And hopefully that you're not taking a huge risk by taking on that debt. And that's something that everybody has to really decide for themselves. But, rich debt, poor debt, good debt, bad debt. Bad debt is, taking on debt for that flat screen, for that big house that you can't afford, and all that. So, that's stuff that you need to really think about for yourself. But you can be sure that the debt that when that gets revalued, it will be revalued higher than the assets that you have on deposit at those very same banks. That you can be sure.
Consumption debt or income-producing debt is what you're saying, right?
Exactly.
Yeah, exactly. Yep. Next question is, what's to stop the Fed from buying mortgage-backed securities, treasuries, and any other garbage it wants to park on its balance sheet forever?
Is that for me?
Yeah, either of you, yeah.
Oh, well, I mean, we already have we have a Federal Reserve right now with a balance sheet larger than the GDP of countries. And all this is going to do, again, is devalue the currency. That's what all this is doing. They can't buy it all. It's impossible. They're going to keep printing this cash out of thin air to buy all this debt, to buy these things. It will just continue to debase the currency to the point of where it's worthless. What people need to understand, again, at its most basic level, is simply this: when it's coming to the currency, when the Federal Reserve prints a bill or adds a bill to a dollar or to a screen, where does it get its value from? It has to steal its value or its purchasing power from every other existing bill. So the more they pile on here, the less every other bill fractionally is worth. So they are trying to do this. This mechanism is occurring, but when you can see how it's playing out and why now. It takes two incomes to support a family. Why now a gallon of gasoline is $3.50 versus 25 cents. This is not going to stop. It can't stop. And again, once they say we can't do this anymore, that's it. That is
Game
this
over.
hero moment. Boom. So again, the system is designed that way, and it cannot go on forever like that.
And don't forget, Greg, they're not bills, they're notes. And what is a note?
Right.
A note is evidence of an indebtedness.
Oh,
The
is it?
Federal
Yes.
Reserve notes.
Hey, well, can I
They
answer
used to
that?
be bills.
Yeah. Well, let me answer that real quick. This is another thing that I love to say. This is just so true. Every bill, note that we have or holding, it's not even ours. It's owned and owed back to the issuing central bank, in this case the Federal Reserve, plus interest. Where does that interest come from? Well, they print it out of thin air. Isn't that awesome? What a great system.
Good to be the king.
This one comes from Matthew, and it's really about how much is enough. He says, I know that all three of you recommend stacking more precious metals. However, I never hear anyone give a recommended minimum number of ounces for silver or gold. How many ounces were enough to make a difference in people's lives in Weimar Germany or Zimbabwe? And how many ounces might be enough to make a difference in someone's life in the U.S. today?
I can answer that. Chris Walczak always tells that story about in Weimar Germany, the bellman of a very substantial hotel gets a $20 tip. The year before it all goes to hell, he gets a $20. I guess it was a double eagle, and a year later he buys the hotel for that $20 gold piece. Now, granted, that's probably apocryphal, but it used to be that that when we were on a gold standard in the 1800s, you wanted to have, I think it was about 5,000 ounces of gold, I think was what you wanted to retire on, which was then $100,000.
Hmm.
So,
Today.
so, I don't think that's realistic, but 15% of your net worth in metals is always the number I hear bandied about, although some people have bumped it up to 25%, but it's always an individual thing that's based upon your own circumstances. You don't want to go putting everything into it, because then if you need money, you're going to find yourself selling off your hoard, and that's kind of counterproductive. So, and then I always say, like, forget about, I always say, in terms of gold and silver, you want to just go by the ratio that it's in the ground, which is now 10 to 1 or 11 to 1, 10 ounces of silver for every 1 ounce of gold that you have. And eventually that's the way the price is going to be, the ratio of the prices, because, there's just not enough silver in the world.
Yeah, right now the ratio is like 50 to 1, 53 to 1.
63, 66, somewhere around there.
I mean, it's incredible.
Yep.
If you put that into a perspective against the global debt, you can see how incredibly undervalued these things are.
Yes.
And I like to look at it as compared to what the Dow has done in the past too. I think that we're going to hit a point at least where the Dow is on par with 1 ounce of gold, and I think it's going to go to 2 to 1 favoring gold. I'll be honest with you, on Outline, this is my book, The Politics of Money. I think realistically the market is 60% or better overvalued. It could go lower than that in a panic selling mode, and we will see gold vault to twice the Dow, in my opinion, at that point. So, for example, if we had Dow 4,000, let's just say, we're going to have gold 8,000. So that should put a perspective on this. With regard to how much, I just say more. I just want more.
Exactly.
And like Kerry said, it's totally true. It's your individual lifestyle, what you need to be comfortable with.
Because
we've storage issues. You have a lot of issues here. What to do with it, and there's problems when you acquire silver. It becomes a real storage nightmare when you start acquiring thousands of ounces of the stuff, and what to do with it, where to bury it, becomes problematical.
Yeah, it can be.
Yeah, and you can never have enough, because it's tangible. I mean, as James Turk always says, there's no counterparty risk to physical metal. And I mean, I think that's a point that's overlooked and brushed aside by too many people. But it is, to me, the underlying key principle of owning physical metal. It is an end in itself, and it is not a liability on anybody else's books. It is both money and an asset all in one. And people forget that. The fact is that gold, I mean, we've never really had a 1-to-1 ratio of gold. We've always had a limited fractional reserve system, whether, with the amount of money or notes in print, I mean, whether it's 20, 30, 40%, gold backing. It's never really been 1-to-1, but I mean, if we did the say the $8,000 gold price, I mean, relative to the amount of money in circulation, I mean, with all the quantitative easing, it's really kind of hard to calculate now over the last few years. But I know that back in 2009 and 10, I mean, calculations were made back then that we'd have a $54,000, $56,000 gold price back then on a 1-to-1 ratio. People talk now of $5,000, $10,000 gold prices, which I think is very normal. That would only be maybe a 20% backing with those older numbers. Never mind all the money that's been injected into the system now. So doing a present day calculation, I mean, you could be a lot higher, quote, in terms of dollars. But who's to say we're ultimately going to value gold in terms of dollars? It might be in some other currency. It's the paradigms, I think, are going to change. And we're going to have to be prepared to change with them. It's just that it's almost like we all think in terms of dollars, but the day could come where we may have to revalue things in another currency. It'd be like changing our native language all of a sudden. And, we have to think in those paradigms. It's like Jim Rogers, learning Mandarin. I mean, he's talked about that for a long, long time, and the importance of that when everybody else's eyes glazed and rolled over and they said, why? And that was so long ago, but he was way, way, way ahead of the curve. And, we have to think about that kind of change, anticipating the future and acting on it in advance, because one of these days it's just going to come out of the blue and everybody's going to go, what the heck happened? The paradigm has changed so quickly, and everybody's going to go, I don't get it. I got caught with my pants down, and now I've got nothing. But at the end of the day, you've got to have the metal. You've just got to have it, and you've got to convert as much of the paper stuff into the metal as you can and have no debt. That's just
while you still can.
While you still can. That's exactly right.
I think you just brought up a great point here. People are going to be, they're always blindsided. Look what happened during the 2008 credit bubble, housing bubble meltdown. No one ever thought this was going to happen. Everyone thought that this was going to continue forever. Housing was going to just go and go and go and go until, it was never going to stop. When people need to realize that when an asset, and we were talking about a house in that particular case here, a home or whatever, land, when it moves above the ability for the average person to afford it, there's a problem. So, and you can see this happening right now with the equity market, why the equities are in a bubble following the debt bubble as well. So again, and people don't know where to look generally, and I think here, really, I believe this with my entire being, and this is what really got me started with this, is just understanding that even when silver was $49 an ounce, it was cheap in relationship to what was going on. I was buying it at $49. I bought it all the way up. I started buying silver when it was less than $10, all the way up to $49 and all the way back down. I won't stop. I'm going to continue to buy this thing because, again, we're betting against the debt. And at $49, it was still a bargain, and it's going to go way beyond that at one particular point here.
That's right.
At a minimum, $300 an ounce. At a minimum.
It's an insurance policy, and you don't buy insurance when your house is burning down. You don't buy insurance after you've been in the auto accident. You can't afford it then, and they won't sell it to you then.
Unless it's Obamacare.
Obamacare.
Then you can get it.
That's right.
Yeah, exactly. Switching gears here, this question's on food. He says, Alan asks, he says, will the problem of food be so expensive that the general population will not be able to afford it?
Well, yeah, there's one perspective where you can think food will be so expensive because the dollar will be worth so little. People always think of it in that context, but when you see the price of anything go up, unless it's something very, very rare, it's not that that's become more valuable, it's that the dollar has become worth less. And it takes more of those dollars to buy things. And I can say something else here, talking about real quick, because I'm always eyeballing the stock market. We've seen this run up here in the dollar in relationship to other currencies. The Federal Reserve is not liking this dollar strength. They will be doing something else, and I've been talking about that for a long time. They're not done with quantitative easing. I don't care what they're saying. There will be a new something coming soon, which will put pressure on the dollar because they're not hitting their inflation targets. What is that going to do? That's going to push the stock market higher because it takes more of these depressed dollars to buy even a share of stock. So today, when Mario Draghi came out talking about how the European Central Bank is going to do whatever it takes, these are his words, to keep that going over there, well, what are they talking about? They're talking about quantitative easing. So what is that going to do? Depreciate currencies even further and vault everything up. It's a twisted mechanism, and they can't stop. They can't help this. And we're witnessing some very interesting things unfold right now.
You make a good point about things that are going to happen, and one of our questioners here points out about timelines, that nobody has the magic wand timeline, and I think that's a really good point because I thought everything was going to fall off the cliff in 2006. Personally, never saw 2008 or the impact or the depth of it coming. and was blindsided, I think, just like everybody else. And so many people were. The things that I've anticipated, and I think so many in this sector have seen them eventually come to pass, but it's like the beach ball has been held underwater for so long that it's now the new norm. Everyone thinks that is ground zero, but the beach ball is still underwater, and that's just where everyone thinks the landscape is right now. They've forgotten that there's a whole other environment outside of where the beach ball has been for the last 6 years or the last decade. So just talk about timelines for a minute, and Greg, you talk about other tricks that the Fed will pull out of their bag of tricks that we haven't even begun to imagine yet. Probably other alternate realities and universes we haven't even begun to dream up yet. What are your thoughts on that? How much further can this actually be extended and pretended right now?
Let me make a couple of admissions here. When the Dow hit 6,000 and the Federal Reserve stepped in with their first round of quantitative easing, I've taken a lot of heat for this too. So I'm just going to come out and say it. I did not think at that point that it was such a bad thing. Let me just say something else. Right before that bubble burst, I was telling friends of mine, people, this is not good. This is not normal. Something looks ugly here. And I'll be the first to admit to say I lost cash in this market when that bubble. I had no idea it was going to go that low. But when the Dow hit 6,000 and the Fed stepped in there, I didn't think it was such a bad idea to kind of just try to boost this up. In looking back at what happened here, and we'll talk about that too in just a moment. But when they started in with the round two and then Operation Twist and everything else, I was seriously, through a lot of that, probably 2012 or so, I was like, this cannot go on much further. However, I did not, at that point, realize the tricks and the backdoor what they were going to do to keep this propped up. But I've become older and more wiser, and I think that, again, they're not done here because they haven't yet completely fleeced the middle class. When they realize that they have this completely locked up, they're going to burst this bubble on their own. This is what the Federal Reserve does, the world central banks. They're serial bubble blowers. They allow a bubble to develop, and they collect the cash on that rise. And then they allow that bubble to burst, and then everyone goes short and collects all that cash that was put in that asset, whatever asset it might be, and I'm referring you to the equity market, let's just say, on the way down. And this is what we're going to see again. When is that going to happen? I think we're darn close. I really do. Could this go on another year? It's possible. Who knows what they're going to do? At this point, I have no idea what they're going to pull out of a hat, and I can promise you they're going to be things that we haven't thought of yet. And I think about it all the time, like, what are they going to do next? I do believe, beyond any shadow of a doubt, and I've been saying this for quite a while, that the European Central Bank is going to institute a full-on Federal Reserve-style quantitative easing. I think that's what Mario Draghi was talking about today. Now, with regard to the Federal Reserve here, they're going to do something else here. They talk about a taper. There is no taper. They're going to do some other kind of thing here to keep it propped up, whether it's bringing us to a full-blown world war, whatever, to keep the dollar propped up. That's what they're going to do. If it means sacrificing lives of all of us to keep the system going, they will gladly do that. They will pave the streets with blood if they have to keep the system going. So it's going to get a lot worse before, I think, the actual complete collapse comes.
Well, just speaking to that, this question here, he says, I do believe that you will need to get out of stocks at some point. What type of red flags do you think we should look for in order to get out in time?
That's a great question. I love this question. I'll tell you why I love this question. Most people are looking in the wrong place here. Everyone is focused, and this is what they want us to do. They want us to focus like a laser beam on the stock market. Oh, look at the stock market. It's hitting all-time highs. So people tend to believe, hey, if the stock market's hitting all-time highs, then everything must be really, really great. But they don't think about the stock buyback programs, the manipulation of interest rates, which is allowing speculation in this market. They don't think about these things. But I always tell people this: watch the bond market, because the bond market or the debt market prices everything. At one point, when you start seeing bond yields rise rapidly, you know it's time to get out of Dodge. Until that point, we need to be, if you're a trader like me, you need to be looking for opportunity to invest in that market, pull your profit out, and go buy precious metals with it. I think that's the best way to play this game.
Kerry, when will QE4 begin?
They're just not going to call it that ever again.
Mm-hmm.
Bad press.
That's it.
And they have so many, look, the truth has come out now that during the crisis, I think we're up to $29 trillion worth of bailouts for the system. Originally, I heard $16 trillion. Now we're up to $29 trillion. That's what Bloomberg's Freedom of Information lawsuit has disclosed. Citibank got $2.3 trillion worth of bailouts. So, they're just not going to make the mistake of telling us what they're doing again, because if they do, it undermines the confidence in the dollar, thereby hastening the eventual demise. And the whole point of the game, as Greg is saying, is to draw this thing out as long as possible. And therefore, whatever they're doing is going to take place behind closed doors. And, I call it the great taper caper, because, all right, they're not tapering because they're not buying it, but who's the Belgian buyer? You have Belgian buying $213 billion worth of treasuries in a month. I haven't seen the last couple of months, but I assume they're still buying. Is it the Chinese who are buying stealthily, or is it some kind of swap taking place? Who the heck knows? But, you have to understand that central bankers are thick as thieves, and they all are scratching each other's backs here, and they're all in trouble. It doesn't matter. Nobody can say that the Chinese are winning this thing at this particular point. Will they be the eventual winners? I'm sure, but who knows what's going to be left to win when they become the winners, and the Russians as well. Because if everybody's currency collapses and they've got all this gold, so what? I don't see them winning this thing. And therefore, you can't believe anything they tell you. You don't really know what is going on behind the scenes, is my point. So QE4, no, they will never call anything QE again. Bad PR, and they just can't afford it now.
Yeah. Let me just add to that real quick here. What people don't understand is the issue when this whole thing went down in 2008. The derivatives of the derivatives of the derivatives add up probably into the quadrillions. They cannot print their way out. They can't do anything. The system is dead. The system died there. That was the party over moment, and this is nothing but a terminal side effect. I've been putting in those terms for quite a while now. So, and there's no way to actually get a handle on it to really gauge what they would need to do to fix the system. They can't. They've allowed a financial monster to develop. Now, what people don't understand here, and Kerry alluded to this already during what he just said, all of those derivatives that they can never bail out of, it's literally in the quadrillions, they still exist. All of those bad derivative bets are still there, and they can never be covered. So, with that in mind, that should and all they're doing is trying to print. This would tell us all how this cannot stand. At one point, it's just going to manifest itself into a reality, because all we have is a fake system being propped up by runaway central banks that have no alternative other than to allow the world to fall into absolute pandemonium overnight, which it will. right now, or just keep it propped up until the very bitter end. They have no alternative. That's really it.
On silver, someone wants to know about buying silver funds or the actual physical metal. Any thoughts on that? That's a common question.
Oh, absolutely. I want to hold it in my hand. I don't want anyone else holding this. I don't want to put this in some ghost fund that may not even exist or some other thing like that. Forget about it. I want the actual asset, and I want to have access to my own assets. Because it's going to, if the stuff really hits the fan, if and when it does, whoever's holding it for you at that point, you may never get it back.
This whole thing of the DTCC, they might be the most honorable corporation in the world, the Depository Trust Corporation. Let's assume they do everything right. But the fact is, when you've got massive shorting taking place, you automatically have to have multiple claims on the same share of stock. And they allow ETFs, GLD and SLV, to be shorted, which means there are multiple claims on the same shares of those stocks. They should have never allowed them to be shorted. I assume it's the same thing with CEF and the Canadian funds too, even though we know that those funds, closed-end funds, actually have the metal. So when it hits the fan and there are actually multiple people saying, I own this share of CEF, which we know is honestly run and has very low administrative costs and is audited up the wazoo, who's going to say your share is the right one and mine is the wrong one, even if DTC is totally above board and honest and above reproach, which it may or may not be. So if you can't hold it in your hand, you may or may not own it.
I think a lot of the manipulation is, we understand where it's coming from here. It's these big banks that are shorting assets they don't even have. Naked shorting. I think we've all heard of this. That is a mechanism, I think, that is just absurd. And again, nothing is real. None of this is real with regard to the derivatives of the metals, SLV and GLD, like you spoke about here. I don't even trade it anymore, even for a joke. There's nothing. They'll do what they want to it. I don't care what the put-to-call ratio might be. I don't care what the charts look like. Don't matter. They'll do what they want, when they want, and they'll dump. I want people to understand this too. This is what drives me out of my mind as a trader. When you see, and I did a Insta blog about this as well. When you see all of a sudden the price of gold or silver gap down or jump down like this, how does that actually happen? That happens when an individual or a corporation or whoever dumps large shares onto the market with a market order, something that no person with one functioning brain cell would ever do. It's the truth. No, really it is. Because when you sell an asset onto the market using a market order, that means that you're willing to accept anything, whatever they want, someone wants to give you for the price, not the best price. So what an individual would want to do, if you had let's say you had a large share of, a whole bunch of shares of GLD, you would put in a limit order, say, I will sell these, but this is what I want for it. You would never dump this stuff onto the market with the market order unless you were looking to manipulate the market.
It's absurd.
So again, embrace these things.
Exactly.
And when this happens, smile like I do, and then go over and buy more. Because you realize what's going on. You're seeing it. Oh, it's so sick. It's so sick.
You're buying a subsidized commodity, just like corn or wheat when you get down to it.
Mm-hmm. This person asked, a gentleman named David, he says, it seems unemployment would worsen significantly. How will people pay rents, mortgages, and how will we recover?
They won't.
That's right.
This is the reset. Forget about jobs. Forget about all this stuff, people. I mean, this is it. Like you were talking about before, Robert. A different paradigm is right around the corner. What we've become accustomed to here is not going to be what's happening here down the line here. It's going to be frightening. Again, in a worst case scenario, even in a not so worst case scenario, this is going to get really ugly. It's going to require more of those fiat bills to buy everything. And who knows if China, I guarantee you, China and Russia, they've been colluding for years, angling themselves against the United States. They want the world reserve currency. They don't want the U.S. dollar as the world reserve currency. Well, having the world reserve has allowed us to inflate this elephantine debt bubble. And unfortunately, I think the people here in the United States, because they've been dumbed down to the point of no return, are going to suffer the most. I think I have a lot of friends all over the place. And I think the European people, they're sharp. They're a lot sharper than the people here in the United States. A lot of my friends over in Australia, I get to talk to these people all the time. They know what's going on. People around here, my neighborhood, they're zombies. They got no clue. You know, they're worried about what's going on with the Kardashians. They're worried about what's going on in some other ridiculously asinine, nonsensical show that has no bearing on reality or anything that any bearing on reality. They're in that box that they've been stuffed into. They've been capable of thinking outside the box. What else is there to say?
Well, let's see here. Yeah, it's all right. It says, one morning we will wake up and see that Russia and China has changed the petrodollar to the yuan or ruble. It's just a statement.
Possible.
What's that?
Well, I think that's a definite possibility here. Once, you see, what people don't understand, and this is the most horrid thing of it all, is how basically what even the petrodollar is. I mean, at its most basic level, it's that the OPEC nations have agreed to price their oil in U.S. dollars. What does that mean? That means that any country that wants to buy oil from an OPEC nation is to convert their currency into U.S. dollars. Once that changes, and I think it will at one point here, with that, but we're going to go to war over this first, the massive war over this, because we fought the entire Vietnam War to establish a petrodollar system, the fiat currency and a petrodollar. That's why the Vietnam War was fought. I cover this at length again in my book, Politics and Money. But once that paradigm changes, once the OPEC nations decide, hey, we're not going to price it in U.S. dollars anymore, that's it. Then you're going to see the gasoline on your corner, what is it, $3.50 now? You're going to see it triple overnight or more. Who knows where it can go? It's insane. But again, those that are in charge are going to fight this to the death with our blood and guts before they allow that to happen.
And then for both of you here, just a question here. It comes up often. There's been several of this question here. What do you think the silver and gold ratio will be during the actual dollar meltdown? Will it go as low as 20-1?
Kerry, you talked about it before. You want to say it again?
Oh, it's gone down to 13-1 not too long ago. I don't have a chart in front of me, but when was the last time it hit 13-1, Greg? It wasn't that long ago.
I think that is where it's going to be. I think it could hit 10-1 at one point. And and again, I think the Dow, if you want to think of it in these terms, gold is going to be at least equal to the Dow, or in the worst case scenario, it's going to be twice the Dow. So if we get if we get a massive collapse here again to Dow 3,000, we're going to see gold 6,000 or whatever it might be. It could be even worse than it could be skewed worse. It's going to be pretty epic at one particular point. There's no doubt about it. And again, it's just a simple movement of cash that we've seen before. We've seen this during the last crash when the market started going down. We saw the price of gold and silver overtake that. I call that an X wave. And we're going to see that again. There's no doubt about it. 100%. It's going to.
Greg, this one's for you. Go ahead, Kerry. Yep.
Just they're so far out of whack, and don't forget all the industrial uses for silver, the medical uses, water for purification, solar cells. I mean, they just keep expanding and expanding, and the fact is that I wouldn't say the world's running out of silver, but it is,
Oh,
supplies.
it is. Yeah, absolutely. Great. That's why I love silver. It's an asset that all those bombs that we're dropping over right now over in wherever they are in
Yeah.
Syria. Some of those missiles have 10 pounds of silver in them, and that's silver that's gone off the earth. Can't never get it back. Can't get recycled. Do a little research into this. All these weapons, all these high-tech weapons have huge amounts of silver in them, and right now it's all being destroyed.
Exactly.
Well, we're coming up on our 90-minute mark here, guys. We're getting to the end here. There's one last question here. I'm just going to ask you. It's a quick one, Greg. With the stocks, should people hold stocks in direct registration or keep them in the street name?
In direct registration, keep them in the street name.
That's the question. Yeah. Should we put our stocks in direct registration or keep them in the street name?
Well, here's the thing when it comes to stocks. Let me just put it in a very basic thing. These companies have value. There's no doubt about it. So if you want to hold stock in company XYZ, I'm not saying that's going to be safe here because, again, it's in U.S. dollars here, but the company itself has value. So, and it would depend, again, what would happen and how much cash would be leaving whatever company, because, again, I think this market is massively overvalued, and then these individual companies are massively overvalued as well. But if you do have your cash in stock of a company, is it safe? I think, again, the company has value. So in that respect, I guess to a certain degree, yeah, it would be safe. And whether you got dollars out of it or whatever you were talking about earlier, whether it's a different currency, again, it would have value. So I hope that helps answer that question.
It really depends on how long you're going to hold it, basically, is what you're saying.
You want to buy a component right now, you can't be holding now. You can't be holding this stuff long term. I'm telling you, this market is ugly. It's going to go up for a while until it doesn't go up anymore. No bull market in history have lasted forever, and neither will this.
Yep. Kerry?
That's right. This whole registration thing, I mean, you just don't know because you just don't know. So
Last question.
I don't think how you register it in the final analysis is going to have any effect on whether you wind up owning those shares or not.
Exactly.
Just look at MF Global.
Yeah, there's one for you.
Hypothecation. You don't own the money that's in the bank that's deposited under your name. How are you going to wind up owning shares regardless how you register it? I still think they can wind up hypothecating it on you anyway, even though Jim Sinclair says they can't.
No, they will. I mean, like you just said, that's a great point here. You put your cash in the bank. If they don't want you to have access to it, you won't. They're beyond any shadow of a doubt. We've seen this before. Most recently in Cyprus, right? That I can think about. But it's a crazy situation.
You're a creditor. You're a creditor of your bank.
That's
when you
true.
put that money in there.
You're an unsecured creditor.
Yeah, you come behind the derivatives now.
Yes.
Under all these laws. I think under Dodd-Frank, you come behind the derivatives.
That's right.
Well, who
Think
gets
about
paid
that.
first? The shareholders, the bond holders get paid first, then the preferred stockholders, and then everybody else.
Mm-hmm.
There's a pecking order. It used to be the depositors came first.
Yeah.
Now it's the derivatives holders, then it's the depositors, and then it's the rest of the creditors. So, forget it. Bank closes, you're screwed.
Last question, guys, a simple one. Would you pay off your house now?
Depends on what your options are to do with that money.
That's a good point. I think he hit the nail on the head. It depends, yeah. It would depend on a lot of things. I mean, if you got lucky enough to get a mortgage with his almost zero interest rate, probably not. And maybe I would look to allocate funds into something different. But
and it depends on your tax bracket too, because look, if you're in a high tax state where you're paying 55%, like New York or California or Illinois or Connecticut, New Jersey, where you're paying 55% of your income, then you're going to wind up, and you can get a return higher than that. or you have other plans for it, it depends.
It all depends.
Excellent. Well, guys, this has been excellent tonight. We're at the 90-minute mark, Kerry, already.
And just a reminder, go over to libertymastermind.us and go get the video if you liked what you heard.
Yeah, we've got videos of all the presentations from February. Greg's whole presentation is there, and it's worth getting it just to see that. He is an absolutely. I've been speaking professionally for 20 years. Greg is an absolutely dynamic. He could be on the national circuit.
Idea.
He could be on the national circuit the way he speaks. He just takes ownership of a room when he walks in. I mean, it's just an absolute treat to watch him work a room. And when we have the next one, which we're planning, it's going to be early next year, Kerry. We haven't nailed down a date or location, but it's going to be probably in the first quarter is what we're thinking, correct?
Yeah, thereabouts.
Thereabouts.
Quarter, I think, is a good time to do it, yeah.
We'll keep everybody apprised. We're going to have one of these webinars every month. We're going to be announcing the next one probably in the next week or two. Is that right?
Yep, absolutely. Yep. And yeah, definitely.
We'll send emails to everybody that was on this one tonight, so you can sign up for the next one. And what we're going to do, we decided ahead of time tonight how we were going to choose the videos that we the set of videos that we gave away for tonight. Whoever participated in the webinar tonight, we picked a really easy method for choosing that, and that would be the first person that logged in and was at the top of our screen for tonight's webinar here that rose to the top. Kerry and I talked about this before, so it would be really easy for Robert to read it. So the gentleman's name is Alexander. It's either Karis or Karis. I'm not sure how to pronounce the last name. But Alexander, you're the winner of our videos, so
right.
Thank you very much. I'll be locating your name and sending you the video access information later this evening. So congratulations, and anyone else that would like to get those, feel free to visit libertymastermind.us. Greg, tell us about your website because it's absolutely amazing. You've got so many resources on there. Take a minute and just tell us about traderschoice.net.
Sure. Traderschoice.net. I post my positions there. That's it. They're right there. I'm kind of an open book. There's also a lot of access to my Insta blog, which I really hope people pay attention to. I do write about critical issues there. It's right up on the front page there. Please friend me on Facebook if you have a Facebook account, or Twitter, or LinkedIn. I would never turn down a friend request. And I'm looking forward to this whole thing with you guys and everyone else. This has been a lot of fun, and I would like to do this again.
Oh, we will definitely. You're going to be at the next symposium that we have, and we will definitely do another webinar. It's just, it's great to do this. I remember when I started out doing the commentaries on GoldSeek, a good friend of mine, he's a banker, he asked me, gosh, Robert, why are you going to do this? You're going to do these presentations every week online, and it sounds like a lot of work, and there's only less than half of 1% of the population even knows anything about gold, and it could be a long time before anyone figures any of this out. And I took people take a either delayed or instant gratification view to everything, and I always took a delayed gratification view, because the way I looked at it, I looked at the Chris Waltzicks, who were pioneers in the online radio and everything, and I thought, and what you guys are doing and everything, and you guys are right. We're right. We've been right. Our timing's been off because they've been able to extend and pretend, but the information is out there, and the masses just haven't caught on. The people that are listening to this webinar right now tonight, they are so far ahead of the curve. I mean, they're getting the information, they're piecing it together. Probably most of their friends and family just have no clue to what they've just, they're on this webinar because this is their universe of people that understand and get it. But the way I look at it is that when this turns, and it will eventually turn, you know, when the masses do finally figure it out, they're going to look back, because what we have now is stuff that's archived on the web. The masses are going to look back over the last 2, 3, 4, 5 years. They're going to look at the Kerry Lutzes, the Greg Mannarinos, the Robert Ians, the Gold Seeks, and they're going to say, my God, these guys were right. They were right 2 years ago, 3 years ago, 7 years ago, and nobody was listening. And they're going to realize all of a sudden, holy smokes, you know, and we're just out here, we're doing it now. I mean, we're learning from each other, we're learning from the other experts in this field. It's a real exchange. This is the Wild West, the wild frontier, and this is where the true exchange of information is happening. To me, this is the cutting edge, you know. This is where change happens. I spoke to corporate America for 20 years on change, but I gave that up in 2007. I mean, because to me, this is where change is happening now. You know, this is so far ahead of where, you know, my business was for 20 years. It's you know, they say a definition of a pioneer, you know, the guy way at the front of the pack, way out there, and there's, you know, you look around, there's nobody behind you. I mean, we're alone out here right now, and you know, the masses haven't caught up with us, but they will eventually, and I think that they'll realize and appreciate the fact that we were all out here. So I appreciate the fact, Greg, that you're here tonight, that you're doing what you're doing, that you don't censor what you think and how you think, because it's amazing what you do. Your thought process, Kerry, the same with you. I mean, it's just an honor to work with you guys, and I'm looking forward to doing a lot more of these with you. This is we're on the cutting edge, and we're going to keep pushing, guys.
Absolutely. All right. Hey, it's great. And till next time.
Yes, indeed.
Absolutely. And thanks to all of you out there for joining us tonight. Thank you very much.
Thanks so much.
All right.
Thank you.